Good? Cool. Well, why don't we start? Let's go down the line. Can everyone do a little introduction on themselves, who they are, what their firm is, and what makes it unique or different in the space? Please.
Cool. Hi, guys. Super excited to be here. My name is Denitza. I'm part of the Bullish business development team in Europe. I joined the firm around a year ago. My experience is traditional finance for over 15 years. I was on the equity side, so crypto kind of trades very similarly to Chinese and Indian equities, so that was an easy transition. For those of you who don't know, Bullish is a Gibraltar-regulated centralized crypto exchange, which offers institutions access to DeFi features such as liquidity pools where they can trade, deposit, and earn a return on their assets. All that in a fully KYC'd environment. We launched the exchange in November of last year, and we've traded over 100 billion since, so we're growing pretty fast. I guess in terms of our USP, what's unique about Bullish is the blended market structure. So we combine the performance of a central limit order book with the deterministic liquidity of something like the DEXs out there. So yeah, super excited to be here.
Thank you. Hi, everybody. I'm Riyad Carey, research analyst at Kaiko. Kaiko is an institutional crypto market data provider. So we source data from over 100 centralized and decentralized exchanges. For centralized exchanges, this includes the most granular tick trade data, order book data, open interest, funding rates for futures. We recently started operating our own Ethereum node that allows us to collect data directly from DEXs. So this also includes very granular tick trade data, as well as liquidity snapshots, liquidity events. So this is great for us as a research team because we're able to utilize this great data to write 2 weekly newsletters.
Hi everyone, I'm Aurora Schwartz, Director of Strategic Partnerships at Wintermute. I'm from also a traditional finance background. Before this I was a trader at one of the large US banks, and I've worked in traditional finance for well over 10 years. At Wintermute, we're one of the largest global liquidity providers. We partner with over 60 exchanges. We do coverage from, we look after token issuers, traditional institutions, hedge funds, crypto native firms, as well as high net worth individuals. And we offer a range of services. We're actually registered in the UK for KYC and AML. And we offer not only, we do market making, but we do quite an extensive OTC coverage in spot and also the derivatives markets. It's great to be with you guys today.
Hey everyone, Chris Aruliah. I lead the commercial function at BCB Group. BCB, we're based in the UK and Switzerland. We're a regulated business financial services group that provides banking, payments and trading services to our clients. We serve the crypto industry globally and really happy to be here with you guys.
So if anyone didn't know, we're in a bear market right now. And so, we're talking about DeFi. I'm curious, what trends have we seen in terms of volumes, both in DeFi and CeFi over the last few months? Has one fallen off more than others? Where is market depth now? And maybe I'll start with Aurora and go this way. Would love to get your perspective and your thoughts.
Yeah, no, great question. Given sort of the current macro environment that we're facing, obviously volumes and general the market is a lot thinner than it has been since earlier in the year. I think you're seeing, if you look at sort of the DeFi space, earlier in the year, we had the highs of sort of 90 billion total value locked. It's off about 70% now. We're at around sort of around 27 billion TVL. So there's definitely been sort of a contraction with the funds locked. However, with that being said, still in the DeFi ecosystem, you're seeing more DEX aggregators, and also still the VC money has been flowing to this space. And also there's been a lot of sort of layer twos and opportunities in the space as well. So I think particularly on the DeFi side, while it's going through particularly challenging time, I think you're going to see a lot of uptick given that the ecosystem is still developing and growing. And in these actual environments, it's a perfect time to be in building mode as well. And I think that's where you're really seeing a lot of good projects at the moment, just buckling down and really building some great technology. I think on the CeFi side, look, volumes are down, but I think there still continues to be a lot more interest particularly on the traditional institutions. And so this is where CeFi is particularly important, obviously, for regulated funds and institutions that might have difficulty accessing the DeFi ecosystem. There's definitely a lot of opportunities there, not only on the spot market, but also in the derivative space as well.
Riyad, why don't we go to you?
Yeah, Aurora covered it well. Volumes are down on centralized and decentralized exchanges. We have seen a bit of a decrease in liquidity on centralized exchanges and decentralized exchanges. Although I would say volumes on DEXs have been a bit more resilient than on centralized exchanges. So I think this sort of proves out the business model and kind of counters expectations a little bit.
What about you?
I feel kind of bad because our volumes have actually been up. We've gained market share during the volatility, during the super volatile months. We also increased our depth for BTC and ETH. We're a top 5 player globally right now at 2-2%. I think that's also a result of the fact that we upgraded to range-bound liquidity. So on our platform, you're not posting orders from 0 to infinity. It's within a tight range. So that triples the order book depth and also provides for more efficient capital allocation. So for us, it's been good, but I can speak only about the CeFi side of things.
And so, as we've seen in the last few months, TVL and DeFi, I think at one point or now is close to only about 35 billion. The entirety of DeFi only makes up about 4% of the market cap of all of crypto. Why, if it's so small, is it so important, and why should we care? And Chris, let me start with you.
Yeah, it's a great question. So I think the one thing with DeFi is, as exciting as it is, and as much as we love it and we believe in it, it's still early days. We're right at the beginning of the building phase. You talked about building. Why is it important? From our perspective at BCB, there's 2 things. So number one, DeFi is probably the most exciting thing since Bitcoin emerged on the scene, right? So we're all chasing alpha. As a financial services group that provides, banking payment services to clients, one of the things we want to be able to give our clients is a return on their money. So where do you go to get that return? Traditional markets is a struggle. DeFi points the way to potentially a better future. Maths and computers generating alpha. And there's a huge amount of really exciting projects out there that we can tap into to get that. So I think from the perspective of building the future of finance, DeFi is a really core element to that.
What about you, Aurora?
Listen, I think there's quite a few use cases for this ecosystem and the development of the ecosystem, not just about sort of capturing alpha, which is certainly a lot of, I guess, particularly institutions want to try and capture, but more of a broader picture on, how can you sort of improve legacy financial systems? How can potentially demographics or regions that perhaps don't have access to normal banking facilities, how do they have now access and payment mechanisms? And then also to international trade and finance, logistics. There's really a lot of core issues, I think, that DeFi will be able to tackle, not only from efficiency point of view, but also with monitoring as well of transactions and utilities. So I think there's a broader implications for DeFi in the longer term. And we're really only just scratching the surface at the moment of the potential. There's a lot of questions, really, I think, in the space and how it develops and what sort of regulatory framework will shape. But I think in terms of, it's an exciting space, really, to be out at the forefront.
So, Denitza, I'm actually going to start with you on the next question here, which is this idea of permission DeFi, right? So we're on a panel which is leveraging DeFi innovation for institutions. We work with a lot of institutions, as I think everyone on this panel does. And one of the challenges that institutions have is getting comfortable with this space, getting comfortable, just start with things like qualified custodians before we even get into DeFi. But getting into DeFi, there's all this conversation around permission DeFi. And so, Denitza, I'm curious as to what are your thoughts? Is that a thing? Is it going to take off? Obviously you guys have a little bit of a different approach at Bullish, but curious to your thoughts broadly.
I think it's absolutely a thing. we believe in it. Our starting point is regulation, and I think these permission pools, they just add an extra layer of trust, especially with institutions. Maybe they test out the waters with the central limit order book, get comfortable, and move towards the AMMs. If something from the CeFi and traditional world works, why not bring it into DeFi, especially after the recent correction? So that's our entire philosophy. I think in terms of our KYC pool, I think people feel really comfortable being in a closed loop with other investors that have gone through the exact same procedure. So I definitely think it's a thing, and we're seeing the emergence of other similar projects across the board.
So Aurora, I mean, you guys are by far one of the biggest market participants in DeFi, as I think everyone at this point knows. And so curious as to your thoughts. Obviously, you guys are engaging in, I guess, trad DeFi, but curious as to your thoughts on permission DeFi.
Yeah, look, I think so the DeFi and CeFi is kind of two separate businesses, if you like, and operate quite differently. But in terms of, I guess, the permission DeFi, there's certainly a lot of, I guess, argument for having a permission sort of ecosystem where there is some sort of KYC, AML component to it. I think it's only if you start getting that sort of component, then you get sort of more mass adoption. At the moment, it is actually still, there's a lot of prohibitive areas to gain access to this ecosystem. And I think the permission sort of argument would open up more opportunities to the space.
And what about you, Chris?
Yeah, I think it's really important, obviously, for institutions knowing who your counterparty is, or, so we're talking about capital provision. So, lenders and borrowers, from an institutional perspective, they need to know what type of institutions are in the pool, or who am I lending to, who am I borrowing from. And I think from a perspective of market growth, permission DeFi is really important because it gives access to institutions to the market.
And so I'm going to start with you again on this one. There are way too many tokens, as I think a lot of us know, but there are also 1,000 exchanges. Where are we going from here? What are your thoughts on consolidation? And curious as to if you have thoughts as to whether or not we'll actually see consolidation, not just on the CeFi, but also on the DeFi side.
Yeah, so speaking as someone who was previously running the corporate business at an exchange, this is something that kind of occupied a lot of my time in terms of strategy, in terms of where we're going. So firstly, the crypto market is obviously a fragmented market. To trade the market, you're on, multiple exchanges. You're having to manage capital across those exchanges. It's a massive thing. Clearly, over time, there's bound to be consolidation. But then the other side of it is centralized versus decentralized. The decentralized option now is very valid, and it's where a lot of people are heading. But I think still from an institutional perspective, they'll want to have that centralized counterparty aspect.
What about you, Riyad?
Yeah, so we've definitely seen exchange consolidation among centralized exchanges since eliminating Bitcoin trading fees. Binance does comparable volumes to the next 10 to 15 largest exchanges combined. So I think that has some pretty important consequences. It's important to carefully watch any moves that they make. And then we've also seen consolidation on the DeFi side. I mean, Uniswap v3 is dominant on Ethereum. And so that also has, implications. I think we should all be in support of competition.
I expect to see consolidation on the retail exchanges side as well, because acquiring retail customers is actually really expensive. And during the recent correction, retail unfortunately has been wiped out. So I think we'll probably start there. With regards to institutional exchanges, yeah, they need to be, the prices and volumes need to answer the requirements of the institutions trading on them. So hopefully some consolidation out there as well. I definitely don't think we need 600 exchanges in crypto. I mean, that's just not healthy for anybody.
So, this panel is about AMMs, and this is another question for you here. Can you speak to, the rise of AMMs broadly and liquidity pools, and what are the implications both for crypto specifically, but also for finance broadly?
Yeah, so I think the birth of DeFi probably gave rise to the AMMs. As you all know, crypto is extremely fragmented and unreliable. Liquidity is extremely fragmented and unreliable in crypto. So I think liquidity pools and AMMs solve for that problem. So in our case, we leverage our own treasury into our liquidity pools and make sure that the automated market makers are constantly posting bids and offers. So if there's a huge volatility event and liquidity dries out in the market, the automated marketers do what they're supposed to be doing. They just make markets. They are not emotional, they don't panic, they're news agnostic, and they also provide for unique price discovery. So I think that's something that the institutions trading on our platform really like. So it's it's a DeFi invention that we're able to leverage in the traditional world as well. So hopefully we're going to be seeing more of these things get adopted into DeFi as we go forward.
So Riyad, I have a question for you, which is, how much are incentives driving volumes in DeFi, right? And we've seen a lot of that, right? This idea of mercenary liquidity, right? Which is, let's go chase for the next big thing. Let's go find that next airdrop. How important is that? And in a bear market like we're in now, right, where those incentives maybe are less clear, has that impacted volumes?
Yeah, I think during the first wave of DeFi, like liquidity, LP farming was super important, but these projects eventually realized that it doesn't really align with long-term project growth or project health. So over time, I think people have become much savvier, have learned from previous, like farming programs, and use tools like Messari, so you can, retail is much savvier about unlocks, token inflation, things like that. So I think we're getting to a more healthy place where incentives do drive some volume, but they're not the only reason for volume.
And so, we've talked a bit here about, attracting institutions. We've spoken a bit about volume as well, but I'm curious, I'm going to start with you, Aurora. What are you seeing in terms of trends in retail and institutional activity in crypto? Is one growing while the other is shrinking, or are they both shrinking? And does it differ both on the CeFi and DeFi side?
It's a good question, particularly in this environment. As you've seen over the last several months, for instance, with the 3AC and what happened with Terra, the retail market has certainly been hit particularly hard. And I think that at the moment, some of the retail segment is still trying to chase yield and speculate, but the retail flow is certainly a lot quieter now. With that being said, there's definitely been an uptick with more institutional sort of smart money in the market, not only on the centralized side, but also on the decentralized side as well.
And let's continue with you, Chris.
Can I actually go back to the AMM question?
Absolutely.
So I just wanted to make a point on that. I think AMMs are really exciting. So we have a yield product. We launched a yield product this year. It's a fund. It's like interesting time to launch a yield fund this year. And that fund allows us to run multiple...
When was it launched?
March.
Okay. Great timing.
Yeah, perfect timing. So that fund allows us to run CeFi and DeFi strategies within the fund. And actually, when we went through it and looking at, who do we partner with or what projects do we go with, you actually get into this world of CeFi is all about counterparty risk. And counterparty risk is hugely complex, particularly if you're posting collateral and you then need to manage that collateral in a volatile market. You don't have that with DeFi. So there's no counterparty risk in that sense, but there's other risks, obviously, which you need to evaluate and manage for. But you're talking about a computer program. So it's security, it's the code, it's the team, etc. So I think that's like one of the key things with AMMs, which is hugely exciting for us in that it kind of just reduces all of that complexity that you have in the CeFi world.
Yeah, if I can just add to that, I think the other great thing about AMMs is that you're no longer reliant on one market maker, 10 market makers crowding around the same price point on the same exchanges. So in a way, it just provides better liquidity and better access for everybody. And institutions need to see that. I mean, we keep on saying that the institutions are coming in order to grow the prime crypto. They can't come unless they have reliable solutions to access that liquidity. So yeah, it's a great invention.
And what about, on institutional versus retail volume? Obviously, Bullish is entirely institutional, and it sounds like, you guys have seen a pickup in volumes, but I'm curious what you're seeing broadly, not just with your exchange, but across the board.
I mean, I can speak to our volumes. Definitely Bitcoin and Ethereum, we've seen a massive uptick. Riyad is probably a better place to speak about the other exchanges and what we're seeing at DEXs. We're a hybrid model, right? So we are kind of bridging the best of CeFi and the best of DeFi together. But maybe we're seeing uptick in volumes also on DEXs. I imagine that's probably what's happening right now.
Yeah, the DEX volume is similar to where it was last year, so pretty resilient, but nothing crazy.
And so you brought up something, Chris, which I'm glad we're finally talking about in crypto, which is risk. Because people, in a bull market and for the first 10 or so years of crypto, that was just not a word that was used in conversation. And so, let's go to you, Aurora. Let's talk about derivatives and hedging. How important is that in crypto? How much of that is being done? And particularly something I'm interested in, you guys work with a lot of token issuers. I'm curious, a lot of these projects hold a tremendous amount of native token on balance sheet. And in a bull market, that can be fantastic. In a bear market, that can be devastating, where these tokens are now down 95%, right? And they can no longer operate. So I'm curious as to your thoughts on derivatives as a form of hedging, the adoption of derivatives, how that's going to change, and also the importance for token projects.
Yeah, look, it's still in its infancy stage, the derivatives market. It's growing. And when you have these significant market events and downturn, people realize that they didn't do the right hedging, they didn't know what they could do in the space. And there hasn't been a lot of hedging solutions in the altcoin space in particular. So to your point regarding treasuries, a lot of treasuries are down 90, 95%. How can they help mitigate that risk? And that is through the derivatives market, whether that is either diversifying the token or also hedging against the downside. And then in terms of risk, in terms of how counterparties operate, having exposure to multiple sort of counterparties to reduce that risk, and also using structured products as well to hedge that risk.
And so, I'm going to start with you, Chris, on this next question. In terms of the evolution of crypto exchange infrastructure, from both a centralized but also decentralized point of view, I mean, one of the challenges that we've had in this space, and I think you would know this better than potentially anybody else in the panel, is the fact that no prime broker has had a balance sheet that looks like Goldman's, right? And so getting access to all this liquidity on these different exchanges can be a challenge sometimes, because you actually need to physically have capital deployed on those exchanges. So I'm curious kind of where we are now and where we need to get to really attract institutions into digital assets.
Yeah, it's a great question. So I think where we are now is certainly when I started in crypto, we're in a way better place. Far more liquidity, bigger, institutions that as an LP you can go to, and it's still growing. But if we think about true institutional flow, it's like the large traditional hedge funds, etc., that we all know are either looking at coming into the space or are playing in the space in some form. We're not yet there. But we're not a long way off. And if you look at the growth in the last 2 years, in terms of market depth and in terms of liquidity, far better than we were previously.
What about you, Denitza?
Yeah, I mean, I fully agree with you. I think what's interesting on this panel is that we are all part of the same food chain, but everybody's doing something slightly different. So as I mentioned before, we're trying to address the liquidity issue in the market. So by having more players like us coming up with these blended structures, I think that's just gonna grow the market, attract institutions. They're gonna feel more comfortable facing institutions like us that are similar to what they're used to, but also give them access to all the cool innovation in DeFi. So yeah, we just gotta keep building in the bear market. That's what we need to do.
Yeah, and I think the other thing as well is that traditional LPs and traditional exchanges are eventually going to come into the space, right? They'll build up inventory. They'll take a place in the market, because that's the other end of the spectrum that we're kind of has been talked about for a while, and is likely to happen. And there's already like institutions. Well, as we know from an institutional perspective, they won't face certain firms in our space, right? They will only be able to go to certain players, and that's an evolution that is bound to happen.
And so, we've talked a lot. We've said retail's trading less, institutions are coming in, they're trading more. DeFi is pretty cool, but where are these people? So, Riyad, I'll look to you on this. What are we seeing from a volume perspective? As we discussed, there are 600 exchanges. A lot of them are very in very specific geographic regions. So I'm curious as to, is there anything interesting that you've seen? Are there single countries that seem to have volumes that defy what we're seeing in the rest of the market, or just broadly, from a continent perspective?
Yeah, so we've definitely seen an uptick in volumes in South and Southeast Asia, Africa, Latin America. But if we're looking at just general volume trends, it's still skewed towards US hours. But you do see kind of cool things when you look at these smaller regional exchanges. So for example, if we're looking at BitTurk, this Turkish exchange, the plurality of their volume is between the lira and tether, which sort of suggests that people in that country are using it to escape high inflation. And you can look right now, like XRP volumes are through the roof. It's the majority of volume on like some Korean exchanges and some Mexican exchanges, which is really interesting.
Why do you think XRP volumes are through the roof?
I would guess that there's a court case or something coming up. So.
Fair enough, fair enough. So this is actually fantastic. We got like 3.5 minutes left, which I didn't think there was any chance we get through all these questions. So why don't we all go down the line? Maybe we'll start with Chris. We'll go back this way. I don't know, any final thoughts, key takeaways? I don't know, any knock-knock jokes?
Definitely not jokes, but in terms of DeFi, me personally, just hugely bullish about DeFi. I love going down various rabbit holes, looking at all the projects out there. I mean, we do it, for our customers, but we're constantly pinged by different companies who want to work with us, and when you get into it, they're just hugely exciting. Great teams building stuff, and what I think will be really cool is that this building phase, once we're out of the bear market, we'll see a lot of more exciting things popping out the other end.
Yeah, I'd have to agree with those points, actually. I think it's a very exciting space. This is a great opportunity now, I guess, in this downturn market to be building some really fantastic tech that's going to really revolutionize financial services and how we really interact. And I think that there's going to be a lot of opportunities for the projects also to learn from, market corrections, to have more diversification, have hedging, because these are all natural cycles. They've come and gone over many a times, even in traditional finance, nothing different in this space as well. And these are the times when there's really new innovations that happen. And so I think we're at a really big turning point.
Yeah, I think all the DEX innovation that we're seeing right now is hugely exciting. I think that DEXs have really proved themselves through this bear market, that they haven't crashed, as we've seen with some centralized exchanges. So it'll be cool to watch how they continue to develop, and whether centralized exchanges kind of adopt some of their innovations.
I think the most exciting thing about DeFi is that the best stuff hasn't even been invented yet, right? So people often say in the .com bubble, nobody knew that Netflix was going to come out, right? And there's just so much to look forward to. I think one key trend to watch out for is the convergence between CeFi and DeFi. It's a pretty tough crowd here at Mainnet to be talking about anything centralized, just because there's a lot of crypto natives. But I actually think if you take the best of both worlds, we're just going to have a much better financial system.
So I'm going to put you guys all on the spot here and ask one of my favorite questions, which none of you guys prepared for. Looking 2 years from now, how many of the top 100 coins by market cap will still be in the top 100? Start with you, Chris, down the line. Quick answers, then let's finish it up.
5.
Wow, that's a hot take.
I'll say about 12.
60.
I'd say about 20, 25.
Cool. All right. Thanks, everyone. If you have any questions, these guys are all available to afterwards.
Thank you. Thanks, Josh.